Hello everybody, this is PillarTrading.com, and in today's chart of the day we are going to be going over the US dollar versus the Japanese yen spot chart. We are currently looking at the weekly chart, right now trading 83.65. You can see here on the weekly chart, and you'll remember if you've been following along with these past videos, we have been looking at these major sell areas on the weekly, both at 99 even and again from 93.50s. These have targets below us. And remember, not long ago we had the Bank of Japan come in and this thing picked back up a little bit, and the true test was going to be on the daily chart, and we were watching it. We were watching this next resistance level, and if you go back and check the last video, you'll see this is the area that we were anticipating. If this thing was going to break above it, we were going to have a new midterm trend, which is going to threaten our long-term positions on the yen. But that didn't happen. We didn't see this move break down. We saw a sell-off, and again, to the long side, the first test of the bull action, whether or not this thing was a legitimate trend, was going to come at that 84.40 level. And if we go to the 15-minute chart, we can see exactly how this thing played out, because like we said, it was going to be up to the market to dictate which way this thing was going to go. It wasn't going to be the Bank of Japan. So we go now to a 15-minute chart, and we're just going to do a 20-day chart so we can see this thing a little bit better. And here is that move we were talking about, that battle. Had the Bank of Japan come in here off of lows 82.87 up to our resistance area. We saw initial selling that first time up into 85.50, broke up, saw consolidation up here at highs as those intelligent traders started to accumulate contracts, started to accumulate positions here on the dollar yen. Price moved off into its support area. Again, these are the same levels as last week. We called these levels before they traded. Then price moves right back up into it, runs up high, doesn't quite reach that entry level, but we get selling. Finally, a breakdown below 84 even. That was the big level, and we've since retested off of that number. Now, what has set up here on the midterm trend is a continuation of the long-term trend. So we go back to the daily chart so we can pinpoint exactly what's happening with the midterm trend. This was the next resistance area. We've seen selling in there. These two major levels are below us. What that means is we're going to have to break through those 82, 87 levels. That's going to be a very large psychological level on this pair. If we can do that, you're going to see a rundown very quickly to that 81.40 area. Very, very quickly. And that's where we're anticipating that enormous amount of profit taking from those long-term shorts. We know that our positions will be closed out. If we are to break below 82, 87, it's going to quickly run down here. That's going to be the sign to take profit on those long-term trades. In terms of the trades for today, what's happening on the 15-minute chart, what's happening on the smaller time frames, we now go to that chart, remembering everything else that's going on. Right now, the midterm trend is bearish. Right now, the long-term trend is bearish. There's no reason to be bullish in this pair. We have, after this big sell-off, we've seen a series of moves to the downside. Again, these are very small moves, but right now the next one is setting up. Currently, we just had a target filled down here at 83.55. We've seen, again, consolidation down at these lows. We're anticipating a run back up to that 83.78 area, 83.80 area, and then that has got a target breaking these most recent lows here at 83.35. So that is the current play. But again, because we have broken out of that long, okay, if we go back to the daily chart, because we've broken out of this most recent long after this consolidation here, we can anticipate a full pullback. Okay, so if that 15-minute breaks down, that just means that the short trend is over. That doesn't have any bearing on the midterm trend or anything like that. We have still got to break above 86.10 in order to signal to us that our long-term positions may be in jeopardy. So guys, that's the play on the dollar versus the Japanese yen. If you've got any other questions on this chart or any of the other charts that we go over, stop by the website www.pillartrading.com. We try to get to those questions as soon as we can. Hopefully everyone's had a good trading day, and I will see you all in the next video.